Hello, lovely people out there. How is everyone doing out there? I am Kate Hill and I'm here to give you the best and unbiased commentary about our property markets, along with fantastic hints and tips. Today, stay tuned for all your latest property news. The Property Investment Professionals of Australia, also known as PIPA, is calling on the new Labor government to make Australia's rental crisis a priority. The PIPA chair and my co-author, Nicola McDougall, says that with the number of rental properties at record lows, the situation is likely to worsen in coming months. She says that investors have been mostly missing from the property market and well before the last federal election, predominantly due to nationwide investment lending restrictions, but also because of the political posturing on negative gearing during the previous election campaign. She also says that while investor activity returned to historical averages in March this year, not enough time has elapsed to make up for the shortfall of the past 5 years. New data from PropTrack shows vacancy rates and rents are at record lows with no sign of easing in the short term. The data on vacancies is confirmed by other sources including Domain, SQM Research, with most capital cities recording vacancy rates well below 1%. Affordable housing schemes, which are said to be introduced by the new Labor government, may result in prices rising in some areas, according to CoreLogic. They say that demand for houses in the outer suburbs and in the cheaper regional areas, as well as apartments, could increase as buyers start to use the newly announced schemes. The price caps on the shared equity scheme are well and truly within the range that first home buyers are looking at. In Sydney and regional New South Wales, it's $950,000. In Melbourne and regional Victoria, it's $850,000. In Brisbane and regional Queensland, $650,000. In Perth, Adelaide, Hobart and Darwin, $550,000 and $600,000 in Canberra. This implies the detached housing markets across the outer suburbs of the capitals could see stronger demand, CoreLogic say. In regional markets, the price caps are likely to support housing demands away from the most popular coastal areas or tree change market, where prices have been rising sharply over the last few years. Now, government schemes which allow more buyers to get into the market when there is not adequate supply will just lead to price increases, according to the regional and national developer Mirvac. Their chief executive warns against these schemes which boost demand only. We are in a genuine national crisis on affordability, they say. It will have an effect on the next generation unless we solve it quickly. And solving it through demand-side measures only fuels the fire. Demand policies aren't bad in and of themselves, but they are poor if they are not matched by supply-side measures. Mirvac says not enough homes are being built to cope with the population growth, even though migration virtually came to a standstill in the past 2 years. Apartment supply along the east coast of Australia next year is still going to be about 45% down on what it was in 2018. The result is that young first-time buyers will find that prices continue to increase. Foreign investors are still keen to spend their property dollars in Australia despite our tax regime, according to analysis by HLB Man Judd. They say that investor demand from Singapore, Hong Kong and Malaysia is increasing, while inquiries from mainland China have dropped a bit. Australia remains an attractive jurisdiction despite the relatively high taxation rates, they say. We have higher than average tax costs for foreign buyers for real estate than some of our global neighbours, including on land tax. Now, this has increased consistently over the past 7 to 10 years at both the state and federal level, and the additional impost is a burden for foreign investors in real estate. The analysis shows that while the tax rate is an issue that investors need to consider, their concerns are offset by Australia's status as a stable market for real estate investors. Strong property price growth of late made it even more appealing, particularly the Sydney, and Melbourne markets, which are traditionally the most popular among those foreign investors. Home lenders are trying to make it as easy as possible for buyers to secure a mortgage, with the CommBank aiming to approve its loans within just 10 minutes. The bank will offer a new digital loan called Unloan, which allows customers to apply faster than ever online. Unloan Chief Executive says that applications are assessed by the team with the aim of a same-day decision, but by the end of the year, the bank wants a good proportion of approvals made within 10 minutes. Using the system, customers give the bank permission to check their transaction data in different banking, mortgage and personal loan accounts. The system can then quickly assess whether a potential borrower meets their lending criteria. To apply for a Unloan, customers select a property, nominate borrowers, add in their income details, expenses, loans, credit cards and other expenses, and verify their identity with facial recognition. They also need to upload their income documents. Now, we will keep you posted on all things property from around Australia as our year progresses, and as always, please don't forget to hit the like button. Please also subscribe if you are enjoying the free content. I really do appreciate it, and I will see you all again soon. Bye.